Good morning, everybody. Good morning,
Good morning.
Mr. Dan. How are you doing?
Doing well. A little rainy. Doing well. Good morning, Troy. Good morning, everybody. Glad to be
Morning.
here.
A
Happy
little
Monday.
rainy, a little cold.
Yes,
Something. What's the wedding thing? Something borrowed, something blue.
that's right. Something borrowed.
Yeah,
Something.
yeah. Something in the market. I guess it'd be something margined,
Yes. Yes.
something bought,
Yes. Something
something.
margin. Something. Yeah.
Yeah. Uh, well, listen. If you had long positions going into the weekend, I think you might enjoy some blues this morning. So let's go ahead
All right.
and get started here.
Every morning at 8:45 Eastern, Option Omega's got your back. Troy's dreaming big like LeBron. Matt's backtesting like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play. Option Omega, you're trading home, where every move makes you feel less alone.
Dan, markets in turmoil. Now, do you look at futures? Will you on a Sunday? Will you get the old computer out and look at them? Are you kind of at the point in your career where you just say, "Listen, we'll see what Monday brings"?
No, I think it's especially when you think about the internet is so accessible, right?
Mm-hmm.
I should say I shouldn't look at that on Sundays, right?
Sure,
We'll start
sure.
with that. But it's so you can check on, just like yesterday you might have checked on the Connecticut the women's
Mm-hmm.
basketball champion. You just check on the score, or
Oh, for sure.
so you check and see if the futures are down. So I noticed they were the E-minis, I think yesterday around dinner time or maybe late dinner, they were down 2.25, if I remember correctly. Does that
Yeah.
seem right?
So, the Connecticut game or the futures?
No.
Sorry.
Well, they were similar. I mean,
Yeah, they were actually similar games. Yeah,
the
in some ways.
Connecticut women's were
Yeah, they're up 30, I think.
doing it to the South Carolina ladies. But what was the
Yeah.
low in the futures? Wasn't it like 48.32?
Uh,
So give consolation, Troy, to, like you said, for people who are long coming into today. The nice thing is, as we speak, we're down about 100. We were just down 97. So by the opening, for some folk, we might be
yeah.
unchanged. So maybe there's a little tone. I mean, that's quite a bit of rally, wouldn't you say? We were. What's the? Let's see.
Well,
Yeah.
I'm interested to see. I mean, what's interesting is when I got on here, we were down 99. The first minute we were on talking, me and you, before we went live, we were down 150, and now we're back down to 99
Oh, I
again.
didn't realize that it was 150 while you were.
Yeah, we these are like 50-point candles right now. I looked at the futures last night, and Dan, I will say this. I mean, I've been trading, not obviously because you look younger than me, which is ridiculous, but I I had. You've probably seen this. I was telling my wife last night. I've never seen the first 5 minutes of futures on a Sunday evening, Globex open, looked like that. I was marking down spreads in vol, like the VX contracts,
Yeah.
of 50%. We were up. It was blipping out to where I mean
Wow.
that's a 80 to 100 VIX. I mean, and I had a short ES position on going into the weekend, And Dan, it took about 11 minutes for the market on ES to be able to close anything,
Is
which
that right?
I've never seen that before in ES. I mean, ES is a pretty globally traded market, you know.
Yeah. In the previous 2 days were pretty volatile, and you didn't have any problem like that.
No, I think everybody, but I mean, to be fair, I think we opened down 80, and within 30 seconds we were down 280, I think, at some point. So, I
Yeah.
mean, it was just madness last night.
When you see,
Which,
it's almost like, I mean, I'm just sensing like where I get my best insight into the market usually is the Panera Bread crowd.
for sure.
They're the best. And you could see it's almost like even the people who like Trump, everything was great. It's like it's great till it affects a lot of these are retired folk. It's
Oh,
great
yeah.
till it affects their pocketbook.
Yeah.
Right. And again, the thought that's gone through my mind for the weekend, you think about it, for 2 years, just the last 2 years, we were up 25% each year. And
Yeah.
it's like, well, we should be getting that, even though what is it historically, 7 or 8% for a year or whatever.
Yeah.
And so,
Yeah.
to be down 30%, I think people are almost like, now the tone has changed, right? Which
Mm-hmm.
might be time for a rally because the tone has changed. And a lot of people are like, well, people who were loving the policies and the president a month ago
Yeah.
are like, we could have done it a little bit differently, but it's all related to their pocketbook.
100%.
I mean,
I have to imagine that Panera crowd, they probably Friday had their financial advisors calling them saying, we just want you to know you're in great shape.
yeah,
Everything's fine, which is the last thing you want to hear from your financial advisor
absolutely. Yeah.
on those type of days.
Yeah. And the only consoling thing each of them were, at the Panera would be the best thing. Don't look, right?
Mm-hmm.
Don't you love that? I mean, like,
Yeah.
don't look at your account and it won't bother you.
Well, I heard someone say that. I heard Bloomberg this morning talk about that with the retirees saying, it's not a loss until you sell.
That's right.
It's not a
Great
loss until you
advice.
sell.
Great
Yeah.
advice.
I love financial advisors. Shout out financial advisors
Yes,
all
it is.
across the world.
And because financial advisors, part of their challenge on their job is you're just dealing with heavy emotions. And so there has to be some comfort and love because it is, when you take that course of a long-term, right? Long-term, things are going to be okay, which they usually are.
Yeah.
But there can be a few bumps in the road.
Well, I have found that, I mean, this is anecdotal. I have found, I know a few financial advisors, and I think they would say this, that they largely play the role of psychiatrist or psychologist rather than, I mean, they're not on the trade desk. They're not sitting there. They're not hedging. They're not doing anything. They've got a basket. I mean, I'm speaking really stereotypically. So if you're a financial advisor, shout out financial, you have a hard job. But I mean, their job really is to sell a package of, I mean, in the 90s, it was mutual funds,
right?
But now it's probably ETFs,
sectors.
Yeah. And you basically say we're diversified through our broad ETFs. And I remember talking to a financial advisor friend of mine who kind of was getting angry at me because I know what's in the bag sometimes. As a trader, you kind of know what's in the bag. And so you say, listen, answer me this. When a market's doing what it's doing right now, what's the correlation between stocks? I don't care how diversified you are. When margin calls happen, correlation goes to 1.
That's right. Yeah.
And so you being in the the utility ETF for diversity, when these banks are margin called, they don't. In fact, this morning I heard so for us, what is the when you think of staples that people buy, is it P&G?
Procter Gamble.
Procter Gamble. Well, in Europe, apparently when Europe opened this morning, the biggest loss was Nestle.
Really?
And Nestle for them is their Procter and Gamble. It's what people run to. It's the staple when safety. and they were surmising that Nestle was getting hit worse because there's margin calls happening, and so when margin calls happen, they have to sell everything. So that's not to say we might end up 400 points today. I mean, this is the type of day it's going to be, it's going to be a wild day, but it has this feeling, Dan. I don't know if you've seen these two movies.
Oh,
The Big Short and Margin Call. I like to watch these as someone who likes to put hedges on. These are my kind of like this is my Hoosiers.
You're Michael Carroll to me. He's
just an angry Steve Carroll.
Steve Carroll.
Yeah, just an angry.
He was excellent. Now, what was Bale's? I don't remember. Carroll
He's Michael Burry.
Guy who orchestrated. Bale was Michael Burry. Okay.
Yeah, that's right. And so, it's what's funny to me about those movies is it captures in my mind the mood of the thing, which is unpreparedness. People just aren't prepared for these type of moves.
That's right. Yeah.
And that's it. I mean, they get caught and they get in trouble. And so, I mean, and to this is the point, we're a backtesting channel. We backtest option Omega. Good luck finding a lot of good strategies with a VIX over 45. And the reason for that is we just don't have enough data.
That's right.
There's just not enough data. Yeah, there's just not enough of those occurrences to be able to come up with something that I personally feel really comfortable trading. Now, I've got things that aren't backtestable. And for instance, one of the things, Dan, if you're up for it, let's look at something I put on last night. I'd love to get your thoughts about it.
Yeah.
Say, what do you do in this market? Well, you don't have to do anything in this market.
Yeah.
And I imagine that's probably what you're telling people today.
Well, and this goes along with I think how Troy is doing this is good, but I think when you think about just one aspect of the VIX goes up, you think of 47 or 45. At least in the options world, you think about, well, I've got to find a way to sell this high volatility because it will come down. And you're right, it will come down. We have no idea where SPX will be when it does come down, but it will come down. And so I think people sometimes make the mistake of, with too much capital, selling a lot of these in the form of, iron condor or a credit spread, or people could do nakeds or in stocks, cash secured puts. All that's fine. But I think one principle to me I've learned is it's not, you hear sell a high percentile. I think it's wait for a little stability, right? Mm-hmm. Because again, I remember guys in the pits, in the 87 crash, particularly a few years ago, people are selling. This was the OEX. That was the precursor to the SPX. And, they're selling 30 volatility, 40 volatility, 60 volatility. It's 80, 120, 150, goes up to 200. Well, they run out of money because, if you're selling options and it goes against you, that hurts. And then you got to come up with more money. So I think waiting till there's some signs of two-way, right? Some stability that we're coming. But I want to comment more. I think where you're going with this is definitely something that makes sense in smaller size.
And I think that's the key, Dan, is smaller size. And so ES, I'm doing this in ES because of two reasons. A, it's half basically the price of SPX. But the more important reason to me was I put this on last night and I've got hedges on. I was telling Dan, I got stuff. I've been taking them off, working them. But I've kind of got the nuclear button hedge, like the hedge that's like, I don't want to take off until honestly things get a lot worse than here. And so I am not a great trader because I'm just being straight up. I don't have the discipline to not play in this market. And I have a feeling a lot of you friends in the community are like me. So, so this is what I did. I did this last night. Just talked through it. And Dan, I mean, I would have loved to be able to call you at 10 o'clock last night, but Dan's an early riser.
Yeah.
And
since over 60 years old, it's usually 9 o'clock is kind of the midnight. I love
it.
The new midnight.
I love it. The new midnight. Yeah. But this is what I did. My thought was I want to do some small size and I want to basically work something to just get 10 to 20%. And I've already adjusted this, but I want to just look at what I did. So basically, in ES last night, I did a put calendar at 48.50. The short is expiring today, and the long is expiring tomorrow. And then, so that's a calendar. And then I did a butterfly, a call butterfly, at the 50. This is ES again, at the 5100 strike, the 5200 strike, and the 5300 strike. As you can see in the graph, I mean, this is what it would look like at expiration. I have
a 1-to-3 ratio, or
well, it was one put calendar and one butterfly. So, but the butterfly is just a 1-2-1. It's a balanced butterfly.
Okay.
To the upside. So the 5100, 5200, 5300.
Oh, I got you. Yeah. Thanks.
Right. And so why did I do that? Who wants to play in this market? Well, again, you don't have to play in this market. In fact, I think we're probably suggesting we don't take we're not financial advisors.
Yeah.
But this is just something if you wanted to play. Now, this is the point. A lot of people set this type of thing because these are kind of expiration plays where you say, I'm going to ride or die this. I'm going to, what's your exit strategy on this? Well, I'd get out if we get past 4,800. Probably, then you're probably a little tempted to let the butterfly ride. Well, this is what I did, Dan. Well, before I say what I did, what my adjustment was, what do you think in a market like this? Something like that. This is a huge range. I mean, we're talking a 500-point range.
To me, it's like you're playing. Two reasons I like it, and I like this as a regular. We would call this a combo, right? That you're using a calendar on the downside, a butterfly on the upside. You're basically taking care of the expected range, right? I mean, if there was, what's the you said your calendar strike was what, Troy?
48.50.
And your short strike on the upside?
Short strike on the upside is 5,200.
5,200 in the future. And where was the future when you did this? Where was the?
I think we were probably close to 59. 59.20. Really, when we rallied a little bit to about 100 last night, about where we were a while ago, is when I put it on.
Okay, so when we rallied, so we were under 5,000.
Yeah, we were under 5,000. We were about right here, honestly. I think at like 930 less, or maybe at 150. I don't remember. But
yeah, and I think and you were just doing did you do them both together?
Well, yeah, I mean, Tasty won't let you do this many legs in one setting. But I just put the put calendar on, then immediately put the butterfly on.
Okay, so you did a combo. Yeah, I think, a couple things that are maybe three things come to my mind with this, Troy. Number one, especially with VIX this high, it's relatively neutral Vega, right?
Yeah.
When you agree, because you have some your betting volatility comes down with the butterfly, your short Vega, and your betting volatility goes up or stays up on the calendar. And so you have this, but it's almost like I would call it an expected move trade, in that you have tremendous room either way. I don't know this you're getting out of it today, right? But it expires tomorrow. Is that the goal?
The long for the put calendar expires tomorrow.
But you'd like to get out of both of them today.
Absolutely.
All right. So really you're just dealing with whatever. What's the expected move for today? Probably.
When I looked at it, 48.50, I could be completely wrong. To be fair, I was a little bit delusional last night when I put this on. So I was
hallucinating when I was doing this.
I really was to some extent. So I don't remember, but I I think 48.50 maybe was my reasoning was that was close to the low that we had opened futures on,
Yeah.
and I thought that because I had no desire to stay in this even
Yeah.
all night, that's why I put it on at that low.
So your shorts were probably, I'm guessing, below 20.
Yeah.
All right. So yeah, I mean, even in, I know it's easy to not look at something when the market's crazy, and I understand that with people. But when you look at this spread and you see how much room it has, and so it's kind of neutral Vega. You have, even in a crazy market, you have quite a bit of room. But here's the other thing: it's a defined risk, right? So you can control your size. You can, uh, your debit is your risk, right? I like this.
Yeah.
I like these a lot. I like these on a regular basis because
I do
instead
too.
of, if you're concerned doing a double calendar or some type of double strategy when the volatility's high, this gives you, okay, we could take care of the volatility a little bit by putting a butterfly on the upside. That graph is normal. The calendar side is always going to be wider, right?
Yeah.
Unless but yeah, I like it a lot in this environment. And again, bringing in size, right? Troy, size is a phenomenal risk management tool, right?
Yeah.
Troy's not doing 100 of these. He's
Oh.
yeah, I like it. I like it a lot for this type of market. And your Vega is, or excuse me, what's your theta in this trade? You're not probably not a lot of negative theta.
No, it was positive theta.
Positive,
It was positive.
yeah.
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 That put calendar was giving you a ton of positive,
Oh
a ton
yeah.
of theta, just because the shorts are. I mean, you've got so much vol burning,
Yeah.
so much, But Dan, I mean, this is what I did, and to the point, like in this type of market environment, normally in a market environment, I would let this slow roll. I would play this out. I would basically try to get out if the tent, trying to graph as much as you can. When the tent here starts, if I'm anywhere near here, I'll start getting out before, I start suffering. But in this environment, I'll just be honest. I had no desire to keep this on even for 12 hours. I mean, this was not. I wasn't doing this last night to say at 4 p.m. Monday, I hope it to be here. And this is what I did basically. I set, because these are separate trades, I set the put calendar profit for what it cost me to buy the butterfly and went to bed. I got filled at about 2:30 this morning. And so basically now I just have the upside butterfly.
A free, yeah. So it
But
pays.
it's a free butterfly to the upside.
See, that's a phenomenal way to do it. And that's what, like, very similar concept when you think about like another opportunity. We have been doing RICs, right? Reverse iron condors. And we have a good trader in the community, Amit, and that's what you brought it up, where he'll have an order in, reverse iron condors. Basically, you have a debit spread on the call side, a debit spread on the put side. And let's say they're typically go for $12. He'll have an order in for both spreads at 30%, 20 or 30% profit. So if it goes down, like you said, if it's going down and one side makes it, you've made money, or you've covered the whole thing. And then the other side, if we revert, is like a free, free lunch or free. So your butterfly is free, right? It's paid.
Yeah.
So you're
paid for.
Are you up a little or broke even on the whole thing?
Well, it depends on the minute at this point. I mean, a while ago I was up, $300 per spread on the butterfly. I'm down 50 now. But again, I don't care
Because you
my
paid, but
theory
I'm
is,
saying you paid for the whole debit on the calendar, right?
yeah. The calendar's gone, and
Oh, that's
so
fine. Yeah, you
yeah,
can almost watch with no stress the butterfly,
yeah.
because it's, yeah, I think
Well,
that's a great way to play, like a Rick or a double calendar or some double where you have two separate trades like that. If you
yeah.
get a big move one way, especially in this type of market, right? I mean, yeah, it's I think it's
Well,
wonderful. I think it's
and
wonderful the way you traded it, right? I mean, you could say, okay, here's a trade, but the way you traded it, you have an order to pay for. If we go down, you're not ignoring the good profit in the put side.
well, and my goal when trading these type of things, and I think if you want to enter into something discretionarily today, which again I don't advise, but if you want to do that, don't think of it either. Think of it in the sense of take profit on the whole trade and close it, and be thankful for your profit. Take a loss on the whole trade and close it. Be
Yeah.
thankful you didn't lose everything, or play one side or the other, because we're going to have huge swings today. We could be up 200 points and down 400 points in 30 minutes today. I mean, it's
Yeah.
just that type of market. And so maybe you play one side to pay for the other side, rather than trying to stay both, stay nimble in this environment. For me personally, I'm not worried about the downside. I have, quite frankly, what turned into a fun day Wednesday now, just every day as my hedge gets bigger. Um, I've got negative deltas that I've got to account for, because I want to try to stay not neutral, but I want to try to at least gamma scalp, which is some of this position. And this is the way I want to do it: is I want to pay for free upside protection. I want to try to not eat into my profit of that hedge by having to buy these outright. I want to try to play it to where I can pay for them with less money, basically. And that's what that butterfly. Now I'm hedged to the upside a little bit. Got
Yeah.
some other stuff on, and it didn't cost me much.
Well, I think you made a great point. Right. You're doing it for, you're mentioning, here's I think a great trading idea, but you're also sharing how it's going along with your position, right? You have a
Yeah.
short delta position, but you want to use the short because the trend is down, right?
Yeah.
To get the profit on the short side of the trade and then let the upside go. But I think these, you think about it on a smaller scale, the last 6-7 weeks in the market, we've had big candles. So you've had two-way. So I think that's kind of the thinking, like even today, thinking about, okay, the word gamma scalping just simply means, gamma scalping would mean, like on a reverse iron condor, you're getting long deltas on the way up, short deltas on the way down. So if you could take profits on one of those, at least pay for the trade, and then if we swing back, but this combo that you're doing, I just think it's a good trade in many different markets, because the main thing is you're buying, your short call or short put in the calendar and your short call in the butterfly. They're like 15 delta, right? So probability wise, you have a lot of room. Now, obviously, this is not a normal market, and that's why I think the capital has to be very low. But
That's right.
I think
and the combo normally, what's the downside to a combo? Well, obviously it could go past the expected move, but normally the downside is it's going to look something like this. You're going to have the tent of the valley of doom here in this middle. Well, one nice thing about this type of trade on a day like today is I'm not worried about a valley of doom.
No.
There's no valley of doom coming.
No, I'm not worried.
It's not going to sit here at down 130 for 6 hours. And so you've got.
Then it's just a matter of like similar principle with a double calendar, like with options Omega. Where do you have your rails? When the options start going in the money, we go too far to the downside, way past the short strike. I think because of the VIX, you can hang in there longer, but it's just where you're comfortable getting out of it. And another thing is, now you're doing this in an E-mini, so the liquidity is pretty good, right?
Yeah, I mean, it's should be. I mean, last night it was a little wonky, but yeah, normally it's going to be. I had no problem getting this filled. I'll put it that way. By the time I put this on last night, this was I don't even think I adjusted price, honestly. It just was an insta fill.
That is, I mean, see, that is so important. I think that's a principle for when you're trading a crazy market. If you're not in a liquid vehicle, I would stay on the couch, because you can give away so much. If you're in an illiquid vehicle that doesn't trade a lot and you jump in the middle of it, boy, you could overpay 30, 40 bucks, 30 cents easy.
Yeah.
So I think but E-minis is probably one of your best vehicles.
Yeah. Well, Dan, I mean, we got some work ahead of us today.
Yeah.
You helping traders navigate these waters, and me just desperately trying to stay delta neutral as much as I can.
Yeah.
So
that's good. Yeah. Thanks for sharing that, Troy. That was good.
Yeah, and we'll be back with some back tests when calmer markets are here. But other than that, I mean, enjoy. Like I said last week, if you're in the market watching this stuff in real time, I mean, to watch futures last night go down 80, down 120, down 280 in about 30 seconds. I mean, you think about that move. That is just a
yeah.
You know,
do you remember what was the volume? I mean, you just when it was down 2.8, was it very light? Was there much volume in that?
I wish I was paying more attention to that. I will say, I mean, again, everything's rumor. I did hear a rumor last night that some of the banks were calling their traders in last night to trade. So I would guess that probably volume was much higher than normal.
Okay.
On ES last night. I mean, a normal Sunday, it's a little, the bid ask are pretty wide.
Yeah.
But I mean, we're at 1 million contracts traded so far in ES.
Wow. 1 million contracts in the.
Yeah.
Okay.
So, but guys, stay safe, stay nimble out there.
Yeah.
And we'll be back tomorrow if there's a market to be talk about.
If there's a market to be talked. Yeah.